All right, morning everyone. Welcome back to Morning Kappa at 8. Right here, happy Monday. Hold on here. Okay, so looking at the S&P 500, well, it rebounded last Friday to close the near the record high, which also driven by the surge in the ultra-beauty as well as the earnings beat, which boosted confidence in the holiday consumer, right? Uh, 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 so I think the sentiment now was lifted by the consumer sentiment index, which rose in December, um, signaling the lower inflation expectation, which finally cheering up the US household, right? So I think over the weekend, right? So global focus was on the Gaza ceasefire talk reaching the critical moment, right? And U.S. trade delegation heading to India this week, discussing on the tariff. So I think as of last Friday, the S&P 500 rebounded higher, maintaining above this 6,800 points level. Okay, well, looking at the China A50 index futures right here, well, it rebounded last Friday as investors position themselves for the upcoming economic conference, right? Betting on the, I would say, a bit proactive fiscal stance for the 2026, and this is what people are looking at China. I mean, for China right now. Okay, so I think the rally was led by some insurance as well as the financial sector. If I can remember, uh, Ping An, right? China Life, okay, and which has also increased or rally on analyst upgrades and hopes for the market supportive reform, right? So reflecting on the positive sentiment right now, market I think market now moving slightly better, eyeing for the 15,500 resistance level, and also support remains firm at 14,000 uh 40,700 points level, right? So if you look at the WTI crude oil price futures today, right, or last Friday, well, it has reclaimed this $60 level, driven by the market pricing in the higher chance of the Fed rate cuts next week, right? I think maybe you can stay tuned and see what Yishan have to share later, right? And also I think for the weekend over the weekend, right? The geopolitical risk premium remains strong after the Ukraine and also the US, sorry, Ukraine and also Russia tension, right? Together with the Qatar and also the Gaza ceasefire talk. It's a critical moment, like what I mentioned just now, signaling a potential instability for the oil price, right? So immediate resistance now is at 62 dollar level, with support is now seen at 57 dollar level support, right? Right. So coming back to Malaysia, to our local market, well, um, if you see here, the VMKLCI trended lower on Friday, which I think due to the profit taking in the some of the banking names, right, and um, telcos as well. Okay, um, so I think this is due to investors staying cautious ahead of the interest rate cuts, interest rate decision this week, right? So again, if you look at the bigger side of things, right, over the weekend, the global sentiment got a boost from the US consumer sentiment data, which hit, I think, 4 months high, right, signaling a soft landing is intact. However, if you look here, looking at the FKLI index, right? Well, positive sentiment has shown slightly in the market, which resulting to a slight rebound last Friday. So for this, we still keep our positive trading bias unchanged, targeting for the 1650 points level. All right. This is our watch list for today. We still, I think, if you look at the day-to-day performance, can take a look at some of the construction names, property names, right? Like Aiman, also we have Gamuda and Suncon. Right. So for our trading stocks for today, we have McLean Technology. This is one of Queenie's top picks as well. So the stock has reached above the 50 cent level on a strong volume, right? So with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at 55 55 cent, 55 cent, and followed by 60 cent level. So if the stock to clear below the 45 cent support, I think this could shift easily could shift to a bearish structure. And also next we have a Malayan cement or M cement, right? So again, the stock is also experiencing a breakout well above the 6.85 cent level. So if the stock to remain bullish, you expect the price to reach 7.20 cent in the coming session. Second resistance is at 7.35 cent level. Do keep an eye at the 6 ringgit and 70 cent level for any attempt of reversal, right? So and lastly, looking at our FCPO right here, well, it rebounded last Friday. I think raising almost over 1.14% to close at for 150 ringgit, tracking gains on its peers, and also I think report that some refiners are switching back to palm oil due to the widening discount. Also, uh, over the weekend, right? I think we believe the bearish cloud are still gathering for this week. Consensus estimate released over the weekend project that is on this week's MPOB data or report will show that a Malaysian stockpile to go a bit higher lah. Okay, so we still keep our negative reading bias remain intact at this juncture, expecting for this recent sideways to unfold, right? So I'll stop here and pass the floor to Yishan for her update. Thanks everyone and happy trading.
Thanks, Aiman. So good morning, everyone. Please allow me to share my slides. So I hope you can see my slides now. So I think recently we have revised our FFR view. So for 2025, so we are seeing that the likelihood of a FFR cut on 10th of December actually appears high for now. Two key developments have shifted our outlook for the rates to actually stay 10. So firstly, so policymakers assessing the trajectory of the Fed fund rates now seem inclined to address the signs of a cooling labor market, as the fresh ADP data highlights the risk of softening employment conditions in US. Secondly, Kevin Hassett, so which is also widely viewed as the leading candidate to succeed Powell as the Fed chair next year, has reiterated his preference for 25 basis point cut before year end. So noting that he sees a growing consensus for such a move. So meanwhile, on the other hand, we have also seen that swap pricing is now hinting at a 125 basis point cut in December 2025 as well. So meanwhile, for the market sentiment, so recently we are seeing that the global sentiment has improved with the RHB sentiment index has climbed back above 1, so signaling a year-end buying bias. So increased expectation of an FFR cut so contributed to this, while survey results from the American Association of Individual Investors reinforce our constructive view. So that said, we note that the equity rally has been supported by a rising FFR cut expectations with a decision to hold, suggesting a potential correction. So on China-wise, so we are seeing that latest data remains unfavorable with the November's non-manufacturing PMI fell below 50, so which indicating a territory of contraction as well for the first time since December 2022, while the manufacturing PMI stayed below 50 for the 8 consecutive months. So market participants will also monitor closely the November's PPI and CPI data releases for China on 10th of December, as any signs of deflation would also underscore weak demand and structural challenges. So as we enter into 2025, so we do expect to see trading volumes to seasonally taper with valuations to stay flattish, but do watch out for Santa Claus rally. Investors are generally expected to be more positive during the last week of December through the first 2 trading days of January, with traders starting the position risk exposure for the new year. So on Malaysia front, in November itself, we have also seen that there's an improvement in the manufacturer optimism as signaled by the S&P Global Manufacturing PMI, which has increased back to expansion territory at 15.1 points from 49.5 points in October, which is also reaching its highest level since May 2024, and also the first expansion after 17 consecutive months of contraction. So in terms of components, the new orders do rose for the third time in 4 months, so marking their fastest increase since April 2022. So although the foreign demand softened slightly. So meanwhile, the sentiment has climbed to its highest since July 2013, underpinned by new product launches, expansion, and also a stronger customer demand. So in tandem with a renewed optimism in the manufacturing, so we do expect to see that October industrial production data to remain robust at a growth of 5.3%. So also in tandem with a sharp surge in the exports, which actually increased by 15.7%. And also the November 2025 PMI turnaround also reinforce our optimistic outlook for the manufacturing sector. In the near to medium term, we expect the manufacturing sector to actually receive support from sustained strength in domestic-oriented industries, easing tariff-related risks, and also continued resilience in the E&E exports. I think that's all from me. I will pass the stage to the next presenter. Thank you.
Hi, good morning, everyone. So today I'll be sharing on the results wraps for the plantation sector. So out of all the companies that are under coverage, 7 beat expectations, 6 met estimates, and only 1 that underperformed. And the key earnings upside came from SD Guthrie, JPG, and TSA Resources, which mainly due to lower than expected unit costs, while First Resources, Golden Agri, Wilma, and Nusantara Sawit benefited from stronger than expected output. One company that is below expectations is only KLK, which they underperformed due to losses in its downstream divisions. Hence, we are maintaining our CPO prices assumptions at 4,350 ringgit per ton for 2025 and 4,250 ringgit per ton for 2026. Looking ahead to fourth quarter 2025, we expect moderations in Malaysian output on a Q-on-Q basis, as we believe that production likely peaked in October. Malaysian spot prices also increased Q-on-Q, 5% Q-on-Q for CPO prices, and 3% Q-on-Q for PK. On year-on-year basis, CPO prices increased 7%, while PK increased 31%. So while the third Q 2025 FFB output roses 12.5%, most Malaysian planters are guiding that they are looking at mid-single-digit growth for the full year. In contrast, in Indonesia, the planters expected to see stronger Q-on-Q output growth in fourth Q, which is that is the usual time where it's peak, the peak quarter as comparison for the previous quarters. This recovery is supported by improving conditions following the last year's El Nino impact, So going forward, most Indonesian planters expect to see Q-on-Q output growth in 4Q to be peak, and also they are targeting to keep their mid to high single-digit growth target for 2025 full year. So the Indonesian Palm Oil Association, or GAPKI, also now expects a full year growth of between 4% to 7% year on year. On the downstream margins, the conditions remain weak overall, but we are seeing some improvement in further downstream products. For Indonesian planters, margins weaken Q-on-Q due to a narrower tax differential. However, on a year-on-year basis, the margins improve. Separately, in Malaysia, the most downstream players recorded wider Q-on-Q margins but narrower year-on-year margins, mainly due to competitions from Indonesia. So looking ahead, refining margins are expected to remain tight, although the downstream volumes now are seeing some improvement, particularly coming from Europe. So overall, we remain neutral on the sector, and our top picks remain continue to be JPG, SOP, SDG, IOI, FR, and London Sumatra. That's all from me. I'm passing to the next speaker.
Thanks, Hilmi. Let me move on with a component update on Sport Toto. So Sport Toto launched a new game called Toto 4D Fireball last week, with an additional Fireball digit drawn alongside the main 4D draw results. The permutations are created by replacing one of the 4 digits in a player's original number with the drawn Fireball number, thus increases the number of winning combinations significantly. Notably, the first prize for the new game is 500 ringgit, as compared to the 2.5 thousand and 3.5 thousand for the traditional Toto 4D big and small bets. This new variation of game ensures that while the chance of winning is much higher, the overall theoretical price payout ratio should be maintained closer to the historical 60 to 64% average. While we do not discount the possibility of cannibalization of the traditional 4D game and eventual loss of novelty effect, we believe the new game may attract bettors who prefer a high chance of winning. We expect the positive outlift in sales per draw to be conservative, if any, given that the models can observe the following: Sport Toto Zodiac game launched back in 2020, and Magnum's lifestyle games launched back in 2023. We view the success of SP Toto long-term equity value remains dependent on its ability to effectively counter the persistent threat from illegal operators and successfully reverse the generational decline in interest in number forecast operated games. We continue to like Sport Toto on its attractive dividend yield of 7.5% at this price level. We keep a buy call with no change to our earnings forecast at current moment to be conservative. Target price remain unchanged at RM1.55. That's all from us today. Happy trading and see you again tomorrow at Morning Kappa.